Success is the progression of a worthy goal or ideal. Earl Nightingale. And Earl is correct. What we have to do every single day is make progress and realize the goal that we want. What's that goal here? It is being able to read stock charts. That is what we are all about. If you can do this, think of what your options are in this world. They are incredible. Whether it is early retirement choice, being able to do the things you want to do, have the cushion you need, being able to relax and know that you know how to take care of yourself and your family. Now, we're all about charting these markets every day. Let's jump into it. We see stocks up for the day, pretty decent. Gold also up. Bonds are down just a little bit. Let's jump into what we see happening. Look at the S&P 500 on the weekly chart. It gets closer and closer to a weekly vertical crossover. We see the derivative oscillator losing energy as markets continue to move up. We're letting things sort out. Had a down day yesterday, an up day today. We see that two-day chart continues to plug upwards. We can redraw that trend line a little bit. Hate for it to get too flat. That's never good. There we go. We're connecting 3 candles there. So what we see going on as far as the two-day chart goes, we had the Tuesday, Wednesday stop. We've got an up candle. Well, complete. Let me say that. It's completed. Price percent oscillator heading up. Derivative oscillator still losing momentum. That's from this sideways slide. That may balance out if things keep moving up. 4-hour chart bouncing off the red signal line. Up in the morning, a little higher in the afternoon. Like we said, up 2.62%. So we may have a weekly vertical crossover by the end of the week. I know there was some exuberance about a supposed vaccine from Gilead. We'll see. We'll see. Just continue to watch the charts. Again, folks, you can pay attention to the news every single day. 10 to 15 minutes is all we ask, following the only thing that counts. That is price movement. Pay attention to these charts. Look at the weekly vertical crossover. It's back in full swing on the Qs. It started earlier on Monday, then back a little bit on Tuesday, then now pushing through quite solidly on Wednesday. We'll see if we have a weekly vertical crossover at the end of the week, going into 4 weeks of decent up movement. Again, halfway through this week now, maybe a little more than halfway. And what we will continue to watch is to see how these things move. Derivative oscillator, it'd be nice if it flipped over to green before the end of the week. It's still losing downward momentum. Two-day chart, we see that latest two-day candle is complete. Nice big up candle. See what we can do about redrawing that trend line. Pretty decent. And again, we'll continue to keep an eye on things. Derivative oscillator still losing momentum, but that price percent oscillator heading up nicely. 4-hour charts trying to cross over, going up. Up movement in the morning, more in the afternoon. Should be happening over the course of the day on Thursday. Unless something happens and the market's down, that exuberance, you just never know with these charts. If you do this long enough, folks, you never know until you have the candle drawn. I have seen weekly charts that look like they're going to cross over and then bounce off. We shall wait and be patient. I see people that aren't part of our community that jump in and say, hey, you could have gotten in way back 4 weeks ago. You could. You could also have just followed the weekly vertical crossover down, gone along with our training, done quite well there. You could have gone back in time and again followed our weekly vertical crossover going up. I mean, there's all sorts of things that you can do. We tend to let our rules, we abide by those. And you know what I find over and over again? They work. They work. They work. They work. So we stick with them. We don't get greedy. We get that nice chunk out of the middle, and we follow the plan. Let's go to the two-day chart. It crossed over back on the 7th. Now, again, if you just want to trade on the two-day candle, then just trade on the two-day candle. If you don't want to use the weekly, don't use the weekly. But again, our experience has shown us over and over that using the weekly along with the two-day tends to work time and again. Relying solely on the two-day ends up being much more of a coin toss. We don't like that. So, and again, you can look back in time and you can find, oh, when the weekly works. You can also find times the weekly didn't work. I'm sorry, the 2-day didn't work. You can do the same with a weekly. But again, the issue that you run into over and over again is the weekly is a major, major change in trend. And again, folks, we don't have to trade on a daily basis. We don't do that. First rule in trading, don't lose money. Second rule, make money. We see the derivative oscillator still losing momentum. Price percent oscillator heading up quite nicely, higher high on that latest 2-day candle. Go to the 4-hour chart. Again, trying to cross over, going up. That's where we are on the cues. Let's leave that. Go to bonds. Down for the day a little bit, 0.52%. See a weak candle forming for the week so far. It is a red open box candle, tiny little wick on the bottom, a wick about the size of the candle itself, a small wick on top. Price percent oscillators heading down, still positive though. Derivative oscillator still positive, losing momentum. That's what bonds have been doing. We go to the 2-day chart, and again, we can see where things were peaking for 6 days of up movement, 17th, candle of the 17th through the 23rd. And then since the 23rd, starting this week, we've just had red spinning tops, indecision tending down. Prices sitting right there on that weekly trend line, 2-day chart. Of course, bouncing off the red signal line, heading down. We'll redraw our trend line when we get some ability to do it half decent. Derivative oscillators also popped over to negative. Price percent oscillator, like we said, moving away from the red signal line, heading down. Weekly, going from the 2-day to the 4-hour, we saw where there was some up in the morning, then down in the afternoon, plumbing down to the weekly trend line. So we'll keep our eye on things, see which way bonds are going to go. Are we going to end up having bonds cruise back down again and crossover with a weekly vertical crossover heading down at some point in the next week or two? Might happen. If it does, we'll be ready for that. We'll be ready for that. Remember, we have an inverse fund, or we have, well, of course, puts. We can always practice trade on these. Lastly, we go to gold. On the weekly chart, what's gold doing? Not reaching a higher high. Green up candle. The body's a little bit higher than the prior week, but not on the wick. We're not reaching a higher high. Price percent oscillator, though, still heading up. Derivative oscillators finally switching over to positive. That's good to finally see. Gold was up 0.55% for the day. 2-day chart, just about flat on the price percent oscillator. Derivative oscillator peaked all the way back on the 15th of April, and really a sideways slide since then. This latest 2-day candle tending down, some indecision there. And remember, it's still positive. Now, that 4-hour chart, even with the up movement, that only happened in the afternoon on our average pace candlesticks, our Heikin Ashi candlesticks, and a lot of indecision there. Not enough to rotate that 4-hour chart over going up. So still don't have an entry point. Just not been enough energy on this 4-hour chart yet to cross over going up. So we'll continue to watch, wait and see how gold is going to shake out. We told you, of course, that they've frozen. There is a call option being optioned by it is the option of the issuer, and of course they're closing OIL because of all the crazy volatility, and of course going below $5, being delisted. So we'll find another energy fund to look at in the near future. What do we see going on with Bitcoin? Up for the day, 7.91%, almost 8% for the day. Getting closer on the weekly chart to a crossover going up. Nice big candle forming for the week. Still hasn't recovered, of course, up to the point of where it hammered down on the week ending the 20th of March. So we'll continue to watch, but we do see the derivative oscillator losing downward momentum. Price percent oscillator heading up. 2-day chart crossed over going up back on the 15th. Slid sideways for another 4 days, and then for the last 6 days, particularly these last 2 days, going up quite strong. And of course, it's got a ways to go. The 4-hour chart also heading up, movement up in the morning, even further up in the afternoon. So again, we'll continue to watch and see where Bitcoin is going. You can see the big drop where Bitcoin on that 4-hour chart took it down on the 16th in the afternoon of March. It's recovered up past that, which is good to see. And we're going to, again, continue to watch Bitcoin, see what happens on that weekly chart. And it is trying to get some footing, trying to head back up again as the economy recovers. Maybe that will happen. And again, if you look how prescient and accurate our weekly chart has been, not a bad chart to hold your breath for, is it? To practice trade on Bitcoin. Works pretty well. Okay, gonna leave Bitcoin, go to real estate, up 1.50% for the day. Again, just sort of sliding sideways over the course of the last, going into 4 weeks now. Price percent oscillators heading up, derivative oscillators losing downward momentum. So again, we'll continue to watch and see what happens on real estate as it's trying to gain back some of what it lost after plumbing down about 45%, and now it's up to about 75% of the 100% it started at. Real easy to compute because the ETF was right at $100, dropped down to $55, and now it's up to around the $75 mark. So again, hadn't had a crossover on the weekly, but it is heading up today. Crossed over back on the 9th and popped up and then sideways and still trying to, again, gain a little bit of that momentum there. We'll continue to watch, see what it does. Go from the 2-day to the 4-hour. And of course, the 4-hour crossed over going up back on the 28th and is again right around where it popped up that morning of the 28th. So we'll continue to watch, see how these things recover. Interesting to watch stocks booming up for the day. Continue to believe that that bull trap is being set with all of the energy taken out of the economy, the energy sector in particular, all the loss of jobs, even with the government stimulus. Remember, government stimulus is not productivity. Wealth in a society, from all of my studying of economics, my undergraduate and one of my graduate degrees, what we're doing now is printing money backed by nothing. And there is a bill to pay in the end. Now, how long can it go on? Well, it can go on a long time. That's why we pay attention to the charts, but we also pay attention to history. And if we can make money on the way up in our practice trades, we'll darn sure do that. And we'll also be ready to cash in on our practice trades when things go down, like we did with that hammer down weekly vertical crossover. And perhaps we're getting ready for an up move. We'll see. God bless, my friends. All the best. We've got a great training for you today about commitment. Those of you who subscribe, you'll see it in your show notes. If you don't subscribe, go to chartingwealth.com. Sign up for free. You'll get it. And also, if you appreciate our videos, you're watching us on YouTube, would you click the subscribe button? And if you're listening to us on iTunes, would you give us a nice review? God bless. All the best from the whole team at Charting Wealth World Headquarters.